at 5.25%. Now, big takeaways from the MPC announcement. RBI is keeping the repo rate unchanged and is sticking to its pause on interest rates, even as India's growth outlook improves after a strong policy week. Making the announcement, RBI Governor also said that with India locking FTA with European Union and a framework for India-US trade deal in sight, now growth momentum is likely to be sustained for a longer period. This is a very big breaking news that is coming in right now at this moment, which is RBI keeps its key repo rate steady at 5.2%, at 5.25%. The big takeaways from the MPC announcement, that is RBI is keeping the repo rate unchanged and is sticking to its pause on interest rates, even as India's growth outlook improves after a strong policy week.
The Monetary Policy Committee met on 4th, 5th and today to deliberate and decide on the policy repo rate after a detailed assessment of the evolving macroeconomic conditions and the economic outlook. The MPC voted unanimously to keep the policy repo rate unchanged at 5.25%.
All right, now we have my colleague Pranav joining me on a phone line. Pranav, if you can put this into perspective, what does it mean?
Well, this is quite on the expected lines because we saw the budget being announced, which was the fiscal policy last week. We saw the European Union trade deal, the US trade deal happening. And now the RBI, which the monetary policy today, has kept the repo rate unchanged, 5.25% over the past year. The RBI has been bringing down the repo rate because inflation has been under control. Among some key takeaways are that the CPI inflation estimate has been raised from 2 to 2.1. That's a minimal or a nominal increase in the projection for the financial year 26. So that's as far as the inflation goes. The RBI has maintained a neutral stance and said that India's growth will continue at about 7.4%, which is 0.1% higher than the earlier projection. That's what's about 7.3%.
Was it expected that some sort of relief would be there, Pranav?
Well, this is quite on the lines expected. If you look at it, a number of triggers have come from the investor or, the domestic sentiment point of view. If you look at the EU-India trade deal, if you look at the US-India trade deal and the budget, which was a continuity budget, plus the liquidity infusion that has been done by the Reserve Bank of India through foreign currency swaps, through bonds, and through market interventions, there is an enough liquidity position currently, as a result of which the RBI probably does not see inflation as a problem, and as a result of which it has not really made any change. It has continued to maintain the stance as neutral and said that there is no intervention required from the rate point of view at the moment.
Thanks a lot, Pranav, for joining in and putting this into perspective.
The recently concluded India-EU FTA and the prospective India-US trade deal, along with several other trade agreements, will support exports over the medium term. Services exports should remain resilient. The spillovers emanating from geopolitical tensions, volatility in international financial markets, and shifting trade patterns pose risks in the outlook. The Monetary Policy Committee met on 4th, 5th and today to deliberate and decide on the policy repo rate after a detailed assessment of the evolving macroeconomic conditions and the economic outlook. The MPC voted unanimously to keep the policy repo rate unchanged at 5.25%.
All right, viewers, now let's move on